Hi, welcome to another weekly analysis video where I talk about trades that I've taken from last week as well as potential opportunities for trading this week. So the first currency pair that I have on my watch list so far for this week is the Aussie Japanese yen. Now what has happened with this pair is that previously it had two rejections at resistance at 79.80. So this happened there and there. And now price is approaching that again. So what I'm going to be looking for is if price does in fact continue up here. This is where I would be interested in taking a short if I can see indecision and then signs that sellers are taking control. So this is a setup that I'm looking for. From last week I mentioned about possible trade for Aussie USD, which did turn out to be a trade. So I'll do a quick recap. The trade is still open right now. Let me show you. So what happened last week was I mentioned I was looking for a pullback touching this level 0.7050, which did in fact happen, and this is where I got in the trade. This was a very minor touch, but it was enough to fill my order, and now the trade is sitting approximately 1/3 way through the target. From what I've learned in the past couple years of trading is that prices tend to respect these support and resistance level even down to the very small time frame, and this is where you can get really good reward to risk ratio. One of my trading goals for this year is learning how to utilize this knowledge and apply it so I can take trades around these key levels that you see me have on my chart, but on much smaller time frames in order to get that bigger reward to risk ratio. As far as trade management is concerned, right now there is nothing for me to do. Stop loss stays where it is. I'm not going to be moving it up yet. If price does in fact come up to say halfway through to target, then I might consider moving the stop loss up, and the way I do it is I might go for 50% reduction, so stop loss would be moved there, and then I'll leave it here until trade gets really close to target. If it does, then I might roll it up to break even. But for now, this trade is staying exactly where it is. There is no management needed. Also from last week was a trade that I had opened, and I showed that in my video. So this was on Euro USD. Let me just bring up the history for you. So in last week's video, you would have seen that I had a short trade position had already open. I shorted this pair based on the fact that I saw this candle here breaking, and that was a strong candle. Then I got in on a retrace, and unfortunately price continues to go up and it has stopped me out. Looking back at this trade now, I don't think there's anything I would have done differently. I had all the signals that I was looking for. I waited for a pullback to get better reward to risk ratio. It's just unfortunate that price did come up and took out my stop. Could I have exited early? That was one of the questions that I wanted to know. And I can safely say that I wouldn't have been able to exit early. So this was the candle that filled my sell limit order, and then these two daily candles follow. Right now at this candle here, looking back in hindsight, it would have been a good decision to exit the trade. However, at the time price on the daily still closed below 1.1300, which I had in my analysis as acting as resistance. So there was no reason at the time to exit the trade simply because price got close to my stop loss. I have to stick to my analysis, and the analysis is that a support or resistance level will continue to hold unless it's proven otherwise. So it looks like this was just a loss. There is nothing that I could have done in order to improve on this. So moving on to the stock indices, I did take a short trade on the US 500, and we'll go through that later. But first, let's go back to the Hong Kong 50. So we're looking at the Hong Kong 50 on the daily chart, but let me go out to the weekly chart. What has happened last week? So we had quite a few weeks with continually buying pressure. Then we had a rejection at this level here that I was watching for a couple of weeks, but buyers continue and now that level is broken. So my sentiment for trading these indices has changed. I am now looking for opportunities to go long. The way that I'm going to do it is the same that I always do. I now look for a pullback back to this level 29,115. So if price does come back here, this is what I'm interested to see, and then if opportunity comes, I will be entering long, hopefully going up with price when it does that. So that is my plan on the Hong Kong 50. S&P 500, I did take a short trade from last week. And let me show you the trade. So we're looking at daily chart. Let's go to the 1 hour chart so I can show you better where the trade, because the trade was taken on a 1 hour chart. The analysis leading into the trade was this. At that time, this level here was still acting as resistance. As price was approaching this level, I noticed a pattern at the time of lower highs and lower lows, namely these. So I saw that and that, and it was enough of a signal for me to get in on a short trade. So I put a sell limit there, had a stop just above this high. Unfortunately, that didn't work out well, and now price has gone above that. So going out to the daily chart, what I'm going to be doing, and this is going to be the same plan as the Hong Kong 50, is looking for a pullback. It might happen on the very small time frame. It might span out over the larger time frame. I don't know, but I will be actively watching, and this is the key. That's what I will be looking for. Looking to take a long if this level at 2816 is tested again, and I could see signs that sellers are weak above this level and that buyers are strong below this level. That will be the sign I look for in order to enter the long trade. That's it for me for this week. Thank you for watching, and I will see you in the next one.